Alright guys, how you guys doing? My name is Carr. Had the pleasure of meeting a lot of you guys in LA. Just want to thank Steve for giving me the opportunity to show you guys what I do and how I see the levels, and let's get rocking and rolling. Alright, I'm just going to be very brief, very short, and just to show that you know, this was kind of funny. Actually, I posted in the forum today, and I was just mentioning that I took this trade on pound Swiss, and the one that just Steve talked about. And I just posted in the forum, and I said, yep, you see the same stuff over and over again. And I said, you know, Steve does it in his class, it does the presentation. I saw it the last time. I just grabbed 30 pips, and well, here we go. This was the same trade, right? This is just kind of blown up. 3 hits to the low. And yeah, of course they slipped me, and I entered right there, and I grabbed my 50 pips right there. So last time I went in, I wasn't too sure, and this time I went in, I saw that vector thing. There was no news, there was nothing. It just happened. Boom! It just hit the low and just went right below it. Grabbed all the pending, hit the stop line, closed right there, and then this one just started taking off immediately. I jumped in, and of course they filled me right here, and the price is not even there. But anyway, we know why they do that. So grab my 50 pips. Kind of funny, 3 hits to the low. All right, and the reason I saw this and I said it was level 3 was because just going to close this was because of this. All right, looking at the levels, right? Here we go, peak formation, right? Drop. The way I look at it is hit the stops and hit the stop, like always Steve says, right? So hit the stop, drop, hit the stop, drop. And then there's nothing in between. You see, there was no stop onto the upside. It just continues to just drop. And as you can see, the moving averages. This is the 13 EMA, which kind of sort of corresponds to the 50. You know, it's missing by 50. You know, if multiplied, it's like 52 to for all those doctors and engineers. But it's very close to the 50 line. So how it reacts to the 50 on the 15 minutes, all right, is going to tell you whether it's a level or not. And I also look and see, you know, whether it's part of ADR and things like that, because normally, like Steve was just saying, if you take ADR, right, intraday, and you divide it by 3, you get sort of where the level is going to be. Again, it's the ballpark, is not, you know, an actual science where, you know, what we are trying to do, and I mentioned that in the LA class, was that we try to create a structure in a dynamic environment, right? And it doesn't always work that way. So the greatest structure we can have is kind of knowing where things fall. So for example, this dropped all the way here. So roughly from here, I don't care how far it pulls back, as long as it pulls back all the way up here. As far as it pulls back, you can pull back anywhere. But once it takes this level out, I know it's going to the next level, right? It comes down here, it takes that out, hit the stop, hit the stop. Between here and here is like 32 pips, and we know this is pound Swiss. The ADR is not 32 pips, right? So it's much bigger than that. So watching the level is a zone. So I just started creating these boxes. I thought it was a lot easier than just drawing colors like this, because you can't really see inside. How do you draw these boxes? And I know the question came up last time, so I'm just going to do it for you. You see this rectangle? Okay, you're going to find this rectangle if you right-click anywhere in this where you see this little cursor thing and you click customize. It's over here. You just find it, right, and you just insert it. And once you insert it, you're going to have it right here. You drag it, you drop a box, right? Initially, it's not going to look like that. Initially, it's going to look like this, all right? It's going to look exactly like that. So you double click on it, you get these little squares on the end, you right click on it, and then you just change it. You just click on that, and now it becomes just a highlight. All right, you're just going to highlight the box. That's it. It's not going to color the box in. And that's pretty much what I've been doing, because before I used to just draw these lines, and I found them to be kind of annoying. So, so I think these boxes brings clarity. All right, you just kind of so if you draw the box and you just say, all right, from here to low, when it comes to the low, you can have an idea, oh, hey, just drop the low. Just now I want to see how it's going to react to the low, right? So that's what it is. And here's, I'm going to talk a little bit about the reset. And this is very funny. Now, some people will just say this is one whole level. And they won't be wrong saying that, okay? They will not be wrong saying that. It's pretty much just one big fat level, all right? So you pretty much have 1, 2, then you're going to have this big fat level, 3, then you have 4, and then you have a peak formation. So that's one way of looking at it. This is how I look at it, okay? Here's your big fat W pattern right here. You take that out. This is level 1, hit the stop, right? If you look at the 15 minutes, okay, you're going to see the stop punch below the 50 EMA. You see it, it's going to close, induce short. But think about what, like Steve said, think about exactly what these guys are trying to do. They're going to induce short, and they're going to pull it away. You can see this nice, beautiful pin bar, pull it away, right? If you actually draw this box right to the low of this first spin, and then you see the stop punch, you're like, boom, okay, they just hit the stop of that low, right? Here we go, goes to the next level. Hit the stop high, hit the stop low, goes to the third level. And you can kind of sort of see a head and shoulder pattern here. Head, shoulder, yeah, shoulder, head, shoulder, right? And then what do? They break this level, and then they form a W pattern. Within it, form the reset right here, all right? And then it goes 1, hit the stop, next level, hit the stop, next level. And then form the peak formation, level 3 peak formation right up here. If I just kind of scrunch it, you see level 3 up here, all right? And then drop, hit the stop, drop, hit the stop, drop. Nothing in between. There's hardly any consolidation. The reason this one looks like that is because you see how far it pulled away from the moving average? When price runs too far away, they just have to pull it back, or they'll wait for the moving average to catch up, and then they'll continue. See, price runs away very far, comes back, catches up, and then just drops. This is not a level. Don't just look at it and say, oh, when consolidation is the level. It has to hit a stop, and price moves so fast. You see how big these bars are? All it did was just wait, hold it, went sideways, moving average catches up. Pushes right fast, wait for the moving average catch up, come to the side again, drop again. Until it comes here, I noticed it was level 3, and I was having conversation with certain individuals, and then I'm like, look, it hit it twice. If next morning, if it comes down and hit the stop below, it's going to be 3 hits to the low, you're going to go long. Right? So that's the expectation. That's why those trades were taken. Right? Now you don't need to trade every single day. This is straight away. Now, if you're really that good, you're going to be able to see pins to the 50, and you're going to take it. But it's better not to take trades that you're not comfortable. Right? I want to show you this so we can see, right? It's pretty easy. Boom, 1, 2, 3. Now over here, you start seeing head and shoulder pattern. You're expecting a reversal right here, right? Over here, it comes back up. You're like, all right, I see the shoulder, I see the head, I see the shoulder. I'm expecting this is to be level 3. After level 2 is level 3. And then all of a sudden, you see this break here and it starts coming back up. You're like, wait a minute, what's happening over here? Then you see this leg is higher than this leg, and you're like, okay, I see what they're doing. They're trying to do a reset. Now, if you don't see that, that's fine. If you just make this whole level, you're like, all right, that's 1, 2, this is big 3, this is 4, and this is 5. I mean, a peak formation, 5, right? Can that happen? Sure, it can happen. Right? But always try to see after level 3, normally there's a reset. And it's usually on the 200, sometimes on the 50. And you see the resets. Now hindsight, you can see it like, oh my God, now I see it. But it's kind of hard to see on the hard right edge, right? So, like Steve said, that's why the pattern trumps everything. Like this, for example, you see the box right here, right? I'm just pointing at it. What does Steve say? You just come in front of the chart, and you're looking where the first leg, you see the first leg here, and you see all of a sudden London starts. These things that just let me know it ends at 3 o'clock. All right, London starts, hit the stop high, I'm a seller. Hit the stop low, I'm a buyer. That's it. It sets the pattern up, I take the trade. I'm taking it this way, right? So that's this pair, right? EJ is interesting, right? Here we go. Peak formation low, right? Level 3 pattern, sort of like half a Batman, whatever you want to call it over here, boom, like that, right? Level 1 consolidation. Look at that big consolidation, right? Comes right back up. Notice how I went to the high, and then I dropped the box to the low. right? And then it just kind of stayed inside that box until it broke through here. Then it kept going up, hit the stop high, hit the stop low in this consolidation zone, because between here and here it's like 30 pips, right? This is EJ. So again, ADR comes into play. You look at it and say, okay, did it pass exceed my ADR? No. And if you notice, most of these boxes are somewhat similar, the size. Some of them are smaller, but normally they are almost the same size. They usually that range, it goes in that range, and it just kind of, and then it breaks above it, right? Comes here. Now this is level 3. I'm anticipating what? Comes out of the box, hit the stop high, drop, but it didn't do it. All right, it just dropped here, hit the stops low. So if you're looking at a 15-minute chart, and I think I may have that right here. This is EJ. Let me see if I can grab EJ right here. Okay. So what you do is you go to that day. Sorry, it's the 5th. All right, so you just go to EJ on the 5th. Nope, that didn't work. Okay, sorry. I had done earlier. I apologize. Okay, so right here. Okay, so you see the peak formation. Sorry, April. Okay, so April 5th, right? Here we go. I'm anticipating for it to come and hit the stop high, right? And it didn't do it. It didn't come in and hit the stop high. Instead, it came and hit the stop low. So it didn't do what I was planning for it to do. It didn't come out of the box, right? There was no stop hunt. And it just all the way went down. So I started noticing first leg here, coming to the low, previous day's low is right here. And then it do that's the signal, right there. Hit the stop low, right below the low, hit the stop low, flushed it, and it's taken off the upside, right? So knowing that it's supposed to do certain things, that's why the levels kind of help, is if it doesn't do what it's supposed to do, there is no trade. Unless you are fluid. You look at it and be fluid and say, you know what, it didn't do what it's supposed to do. It's supposed to drop, but it hit the stop the other way. It's probably going to go up one more level. And sometimes it does that, right? It comes up, big peak formation high, right? Hit the stop one more time from the peak. There's more volume over here. There's like Jim Nicholson said, there's more volume up here. They want to hit the stops on both sides, cause confusion. And then they move the market back, right? So drop, and then it just kind of went sideways consolidation now. So we're going to take a look and see what this guy's going to do over here. All right, it broke through this little area, and then it just went sideways right now. The crosses are not as clear as the majors. All right, they're never as clear as the majors. Example right here is pound dollar. All right, I know that people have been confused with the pound dollar. They not know what's going on over here. So there we go. You can clearly see, right? Here's level 3. Then it went 1, hit the stop, rise, right? Hit the stop, rise, and then here's kind of like consolidation, forming a peak formation, right? It just kind of went above, not really much of a big stop hunt, and then it just a peak formation high, part of level 3. Some people call it level 4, but it's just peak formation high. Pins to the high, right? Stop hunt done to the high. You can see these pins to the high, and then starts dropping from here. Now you can see 1, okay, 2. Just remember, it's a range. It's not lower lows and lower highs and all that kind of stuff. It's just a range, right? Just step back and take a look. You can see 2 hits to the low. Can you trade this pattern down here? Sure you can. Hit the stop high, big fat M, take the short. Comes right to the bottom. Here's your target. You know your level 3. Here's your trade. This is where you do those things they call range trading. This is where you actually do range trading, right? You trade. You can go on. You can, like Steve said, you trade both ways on level 3. All right. So you go long at the bottom. You go short on the top, right? Back up here. 1, the big hit the stop consolidation. You see the distance from here to here. It's like 19 pips, not a new level. Okay. Don't get confused with this stuff. It's just one level. Then it comes here. Here's just consolidation, went sideways. Back up here, right? Hit the stop, even true. And then level 3, big fat M. Right? It did form a W. So you could have traded from W back up to the top, and then you see the top, you trade it back down. It's exactly opposite of that. See? This looks exactly like that, backwards. Right? Down. Now, this could be a reset. Okay? I know Gary, he took that trade. There was a quarter wood right here. He just took this trade in the Asian session. Now, Steve said don't trade in the Asian session. But again, if you have the vision and if you can see clearly what these guys are doing, you could have taken that trade. Right? It was nice. He was expecting that. That's the difference. He was expecting that. He knew this was consolidation. This could be a reset. And he was right. Boom. Came right back down, hit the stop low. Now we're up here. Right? And I'm just going to do maybe one more. Now how do we use this along with your homework? Well, just quickly going through it. You grab this, and now you're going to look in your 15-minute chart, and you're going to say, okay, so what am I looking at? What am I expecting is going to happen? So, for example, right here, we'll go right back, pound up. All right. Right here, we're looking at the price coming up. Here's level 2, right? Level 2, ideally, you want to go long. You don't want to go short because you know you're going to hit the stop high, you're going to hit the stop low. You want to take it up to its level 3, right? Sometimes it'll go right away. Sometimes it won't. It'll come down, it'll do this kind of stuff, it'll bounce, bounce, bounce. But you kind of sort of have a bias as to which direction you go. Now, there are some people that only want to trade level 3. They'll only trade here, and they'll only trade here. They don't really care about level 1 and level 2, right? And that's fine, because of the higher probability trades. Right, you will catch it right here, and then when it comes back up here, so this is, April 11th, right? April 11th, pound dollar. This is how you're supposed to, when you do the homework, you go April 11th, you're looking at it like this. You're like, all right, so I'm coming in, I'm watching my chart. I'm like, I'm expecting this. Which was this? Oh, am I in the wrong pair, right? I gotta go to pound dollar. You see that? You're expecting to come and form the second leg of pound dollar. So you know you took, let's say you took this trade right here. It's beautiful, it's perfect. Big fat M, you take that trade. You could have traded this back up. That's the example that Steve talked about right there. Right? Traded it back up. Comes right to the high. Throw the pin toward the high. You could have taken that short. This is the stuff. This is how you actually look at the homework and realize what these guys are going to do and when they're going to come up. Anticipation is going to come up here and do that. If it doesn't, it's going to do it in the US session. All right? These are the better trades because on a larger time frame, you're looking for that pattern. You're looking for that pattern to come and do what it's supposed to do. This is EJ, sorry. All right, so this is that pattern we talked about on the 11th, big fat M pattern, pound dollar. So you line up what your expectations are. This is level 3. I'm anticipating this to happen. Right, so normally you can chalk it, you can mark it and say, okay, it's a reset. I already marked it before. And you can just predict which direction it's going to go. So now you're going to be like, all right, so now it's going to go this way. And then my anticipation is going to go this way. And then you're going to hit the stop. And notice how these are V's, right? Like Steve talked about. Big fat W. A big fat M here. Right? Should we scrunch it? So day 1 drop, day 2 drop, day 3 drop into consolidation. big fat W, and then start moving back up. This is nicer to see it 3 days like that. Sometimes it doesn't do it like that. It'll go into this choppy motion. But notice the stop hunch, right? It's V. Sometimes you'll get a nice little M, but most of the time it's just going to be like that. Boom, boom. So if you're only trading M's and W's, sometimes you'll only trade level 3s, which is fine. Just notice that this is what's going to do. Okay? It's going to form V's like that. It'll come up like that. It'll just do this until you wait for the third day. So line this up with the 15-minute chart and just look at it. Sometimes hit F12, right? I'm around the hard right edge. I'm looking at the stuff. I'm anticipating the move. I'm at level 3. I'm anticipating for it to come up and form an M pattern. I click F12 until I realize what's going on. So if you're looking at your 15, have 2 screens up, right? You have your 15 minutes and your 1 hour up. And you start scrolling and you're going to be like, all right, this is coming up to the high on the 15 minutes. What does it look like? So every time you click 4 times on the 15 minutes F12, you click once on the 1 hour. And you're like, boom, I see the pattern. I'm in. So that's what you're expecting to happen. Level 3, big fat M. See? An M over here. You're expecting a W over here. Level 3 pattern. All that stuff. So the more you see this stuff, the more you're going to be able to see it. Just don't mark the charts up. Like I have some charts that are marked up, and it's nice to mark these charts and be like, yeah, this is this, this is that. But put it in the context of what you're actually seeing on a 1 hour chart, right? And this is when Steve says, this is in hindsight. Now look at it when it's actually happening on the hard rate edge and see how these candles are forming. See, this is going to happen. Boom. The minute it hits this here, you're like, psh, I know exactly where this is going. If you want to wait confirmation, you can go in with a foot soldier. Gary likes doing that. He'll go in with a little foot soldier right there. And even Steve talked about that. And then the minute this one confirms, I only go long on a green candle. But if I notice this extended and it closes, I'm in a little bit. And then the rest of the position goes in right there. And that's it. That's lights out, 50 pips. And then you can even catch the reversal. Comes right back, railroad tracks, right inside the red box. And you're right back in here and grab 30 pips. All right, so this is the second leg of the W pattern. It goes over beyond the first leg, but it comes back and it closes. All right, so again, look at these, and then look at it on the hard right edge. Okay, hit F12, scroll your screen backwards, hit F12. 1 candle at a time and see what it looks like. And then if you have a second screen, which would be nicer, if you have a 1 hour chart, every time you hit 4 of these, just go 1 on those and then see what it actually happened, what it is going to look like. And then at some point, you're going to start anticipating what it is going to do, and you're going to wait for it. Like that pound Swiss trade. I missed it the last time. I only grabbed 30 pips. This time I was like, man, I am not letting this one go because I've seen this before. All right, so anyway, I'm going to end right now. Just want to let you guys know that Steve had an opportunity to speak with us, Ray, myself, and a couple of other guys, and we put together a bunch of really awesome presenters. Every Sunday, 6:30 p.m. Eastern Time, we're going to have a different presenter. And what these presenters are going to do is they're going to come in and they're going to tell everybody what they did, how they started doing their homework, how they begin to get the chart vision, what they did to get to the next level. And you're going to get presenters like Tim, Gary, Jim, Sanders, Adam Ford, Fred, and many, many more to come. I don't want to give all the names out right now, but we've already got a couple of people lined up for the next 2 months. And we have a bunch of other people that we are contacting right now. If you guys have any ideas of who you guys want to really see, just throw it into the forum, man. Maybe address it to me or Ray or somebody. We'll take a look at it. We'll contact these people. There are a lot of people with a lot of successes, and it's always nice to hear it from different people because you'll never know what somebody else is going to say that's going to really click for you. All right, so 6:30 Sundays.